We all have used Zepto, Blinkit, Instamart, but very few of us know the way how these platforms are able to cater to us just in a few minutes. This video is just about explaining all of that. India's logistics sector is speeding towards a brighter future. Last year it was a $400 billion market, and by 2027 it is projected to reach a $600 billion market. In this video, I'm featuring Ratna Mehta, a seasoned investor who's now running Fundalogical Ventures, a logistics and supply chain focused venture fund, and Dinesh Tiwari, who's the managing director at Broad Peak Capital Advisors, who's advising many private equity funds globally. In this video, we have together discussed the reasons for the rapid growth in India's logistics sector, with quick commerce emerging as a new theme. We also have discussed how logistics is contributing to 13 to 14% of India's GDP and how it is already giving livelihood to over 22 million people. We also have spoke about the most important part, which is how the sector is attracting major foreign investments and what are the new challenging gaps where now startups can innovate and build. Tune into this discussion as you will come out with a lot of knowledge on how logistics in India is operating and how your favorite platforms like Zomato and Blinkit function. Welcome Ratna and Dinesh to our show. We're going to talk radically about logistics as a sector today, and who better than you guys who've had more than a decade of experience in investing and advising different companies into this sector. So I want to start by asking Dinesh, you first, since you've had more than 30 years of your career in different funds and you're on the IC also, as you were telling me, of different companies and funds. So why don't you tell me, how has the logistics sector in India evolved in the past 2 decades or so? What have you seen in terms of the change that's coming through the technology in logistics?
So I think if you look at logistics is actually a pretty old, very ancient topic, right? Which is then, right? I mean, so if you look at it, very famously Napoleon said, right, an army marches on its stomach,
Yeah.
okay, and which is all about logistics. The logistics has always been important. And if you look at from the Indian context, there it is the fact that the role of internet and technology has actually made a huge difference. Right? The way people actually shop has changed. Because of the way people shop has changed, the way people expect goods to be brought to them or buy the goods has actually changed a lot. Right? So from 2000, I would say 2006, 7 onwards, right, there's been a huge change.
Yeah.
And logistics is all about, ultimately, if you look at it, it is about aggregation of goods. Which is the right, goods are made in one manufacturing facility. Many goods are made together and they need to be sent out to millions of customers, which is in. And every individual customer needs thousands of goods.
Yeah.
Which is in. So there's always a requirement which is in place. And as technology has evolved, people's habits and expectations have evolved, right? So that has undergone a lot of change. Okay. So starting off from the way the early days of, say, a Flipkart, which is in place, right? Or which started off, say, 2009, 10, there. The way people shop, you expect things to be brought home, which is in place. And that has made a huge difference in the way goods are either stored or actually transported, right? So logistics is both storing of goods and the movement of goods, which is in place. Both of them undergone a change, right?
Which one is seeing more growth?
I think it's equal both, which is in place. There. If you look at the amount of investment that are taking place on the warehousing side of it, right, which is there. And I think it's also both on the warehousing of physical warehousing of goods that are there.
Yeah.
And the other important thing that is happening is that the cost of actually one tracking each and every parcel has become so easy. Right?
Yeah.
The cost of tracking has gone down so much. Right? Now, what that means is that you can actually make it, you can optimize the delivery, okay, very, very quickly and a lot more efficiently.
Right.
So it's not only the delivery of the good, but it is also gathering intelligence about what that person wants, which is then in behavior, which can be used to sell even more or a much more targeted marketing.
Yeah.
So that's getting more and more relevant.
Got it. I mean, just today only while booking a parcel, I was checking the delivery app and they had this claim that, if you book your order by 2 p.m. today, you'll receive it on the same day. And I was like super shocked, is this even possible? So I wrote to their head of operations before actually placing the order because it was for my passport calling from Delhi to Bombay. Yeah. They're like, yeah, we've written it, but it's not operational. I'm like, this is giving a false claim to your consumers. I mean, how can you even put something up if it's not, operational? So, like, are you seeing, Ratna, these kind of things being said in the logistics market just to appeal the customers and tell the investors, that okay, if we do this kind of a model, we are going to get more customers and make these many revenues. Is it happening?
So, what is actually happening is a service provider has to generally follow what the customer wants, right? The consumer behavior is changing dramatically. I think COVID has changed a lot. And with COVID, a lot of people went online as well.
Yeah.
Right? Even I never used to shop so much online, now I shop, right? Amazon used to earlier take 2 days to deliver. Then with Prime got delivered on the same day. Now you have Blinkit which is delivering in 15 minutes,
Right.
15 to 30 minutes. So you are getting used to getting everything instantly and that is becoming a habit, right? So a delivery would normally take 48 hours to deliver. A Blue Dart would also normally take that much time. But for certain parcels and certain documents, I think same day delivery, there are new players who are emerging, who are doing this.
Which are some of those players?
So, not necessarily documents.
Yeah.
Documents will take its own, journey. But especially when it comes to certain products, brands, etc. Apart from Blinkit and Zepto, which are marketplaces, there are brands who are directly going to a customer.
Okay.
Right? Like a Blitz. Like a Zippy, they do same day delivery, right? So, for example, if you are ordering any skincare product, for example, you have an option of going to Amazon and buying it, right? And it will get delivered within its whatever time.
Yeah.
Same thing, Amazon now tries to deliver within a day, correct? Now, if a brand doesn't want to use a marketplace and wants to do D2C, D2C logistics has always been challenging for brands.
Correct.
For brand, it is their product, right? They don't want to get into the whole supply chain and try and do it the same thing. So they are using these companies like Blitz and Zippy to deliver on the same day.
Got it.
This is a fairly new thing which is happening.
Okay.
Let us see how that evolves. But the trend, as you are seeing, is servicing your customer ASAP.
Right.
So what they say is that when you do that, the cancellations reduce, right? If you deliver faster, and the cart to conversion improves.
Okay.
Dramatically. So it is not only you're trying to please your customer, but it is also that your overall revenue improves and your returns decrease when your delivery is faster.
Got it. But to ensure faster delivery, what are some of the checks that a company should keep in mind? Like you said, Zippy is doing that, but Amazon will take fairly longer. So, like, if Amazon has to match the level of Zippy, what will it have to do to match up?
See, Amazon, Flipkart, delivery. So, delivery is a 3PL. Amazon, Flipkart are marketplaces, right? These are giants. They decide they want to do it, they will be able to do it tomorrow. However, if you see, 2 years back, we all used to think that quick commerce is not going to sustain. Correct? We thought this is going to die, they're burning money. Why do you want a product in 15 minutes or 30 minutes? Blinkit has turned the tables for that, right? Blinkit has shown how that can be done effectively and how you can turn profitable by doing that as well, right?
Yeah.
So, now Amazon is feeling the heat for that because initially thought Blinkit was only for groceries. Now Blinkit is expanding its categories from electronics to skincare to beauty care, etc. Everything.
Yeah.
So somewhere Amazon, Flipkart, everybody is going to follow the trend. It's always easier doing it in smaller setups, new innovation, rather than doing it in larger companies, right? Like today, we know for a fact that delivery has been trying to work on the same day delivery model for a long time. Like they told you, right? It will be delivered in the same day. But it is in the making for a while. They decide they want to put people behind it, buy some company and do it, they will do it. It's not that they can't do it. But the smaller companies are the first movers.
But like you said, it's taking long for them to implement the same day delivery. So what do you think are the hurdles to achieve that?
It's just the mindset, right? Delivery is a company which started with express delivery. They grew on the back of e-commerce giants like Amazon, Flipkart, and then Meesho. Now Amazon and Flipkart have taken a lot of their logistics in-house, right? So now the next phase that they are seeing is faster delivery, same day delivery. So they have to gradually move, right?
Yeah. But what kind of business models are you guys seeing in this industry that logistic companies are following, like in terms of the B2B play?
So in the B2B place, see, what is happening is ultimately the purpose of logistics, right, is all to about reduce cost. Right? Now, if you look at it, ultimately, this whole national logistics policy, right, which came out, the idea that this is about 13% or 14% of GDP, this should come down to 8% of GDP, which is what again the rest of the world. So, and this is more so in the B2B logistics space, right? Also, what happens is in the B2B logistics space and in the logistics space, the more amount of material that is lying in transport, right, more amount of money you're blocking in working capital. So the question is that the more efficient you make it, the greater impact it has on profitability, which is there. So I think that is clearly happening. And I think the big impact on B2B logistics is actually happening in the warehousing side. The change in rules on GST, which essentially resulted that you did not need to have individual state level warehouses. You could have a much more business related warehouses that you could have across the country, right?
Yeah.
That's making a big change. Secondly, I think there is this whole exercise which is in of what is called asset pooling, which is in, right, where you earlier you would sort of transport, for example, in cartons, which is in place, right? The entire exercise of using wooden pallets, for example, and basically being a reusable kind of an exercise there. So that's the other, the anything which is more environment related friendly perspective, that is getting to be quite active, which is in place there.
So is the usage of plastic getting reduced now in
I would think
logistics?
that the idea is to become more reusable rather than one-time use, which is in place. Yeah. So
But
the
our
advantage
companies-
if you use more when people are saying that if I were to use a carton, okay, I use it once and then destroy it. Instead of that, can I use a crate, which is in, and I but then use it 50 times or 100 times, which is there. So the question there is, is the reusability of things that is coming in, rather than the one-time use of material, which is there.
But you just said, what are some of the key trends or what are the B2B players doing? I think one of the biggest thing in logistics is, like he said, it's there from time immemorial, right? It's there from the Silk Route times. Logistics is a key thing, and global trade. Right now for India, I think with the consumption growth and the manufacturing growth, it is a lifeline. But what is happening is, to support that lifeline, you need some innovation. Like the Gati National Logistics Policy, all of that is putting a lot of dollars behind building infrastructure. But the picks and the shovels around it, which needs to support that infrastructure, needs to be built. Correct? One of the things in logistics has always been a very fragmented industry. Correct? So you have multiple small providers, whether it's logistics, whether it is warehousing, there was no tracking earlier. What is happening or what we are seeing companies do is integrating everything. Right? They're trying to provide end-to-end services, which is what everybody wants, right? If you are a business owner, you don't want to deal with 50 different vendors, right, for your supply chain. You rather have somebody who gives you end-to-end services. Now, these end-to-end guys are using tech as an enabler, right, where they can bring in time efficiencies, they can bring in cost efficiencies, and they can bring in more visibility. Right, which is what delivery did beautifully, and I think one of the best platforms in tech in logistics is built by them.
Right. But like delivery is now planning its IPO.
Delivery is a listed
company now.
Yeah, it like listed itself, but it took a long time to plan its IPO, you know. So
it takes time to build businesses, right? Because ultimately, when you look at it, public markets basically want predictable businesses, which are a lot more. So they say that you should go IPO when you're able to predict 6 quarters of your performance, right? the very nature of a startup means you're dealing with more uncertainties, which is then the greater the uncertainties, the lesser the visibility that you have of the future.
Yeah.
So that's why it takes a fair amount of time for businesses to build up. They may be profitable, they may be scaled, but till you're able to build revenue visibility, which is the thing.
But what's
it
your
becomes
take on
difficult.
SME IPOs now? Do you think that will perform well?
I think, like all SME IPOs have given businesses essentially access to capital,
Yeah.
right? And I think from that perspective, it is good because anything that encourages basically flow of capital to new businesses and startup businesses is good. I think the question what happens is when there is excess amount of capital that flows in for the wrong reasons, which is that's where it becomes a problem there. What also happens is I think given that the scale of the IPOs are small, which is in place, you do have a lot of people with different interests that come into it, which is there. So you find SME IPOs where you find that the stocks have risen 100%, 200%, and 1,000%, which is in right, which doesn't seem logical sometimes. There.
I think SME IPOs, you have to see it from two angles, right? One, it is actually an excellent platform to mid-sized businesses going listing, being more transparent, accessing capital, and driving their growth, right? Because till now, what the IPO market used to say is a certain amount of top line, 100 crores in PAT, only then you are able to list and all of that, correct? Growth should be 30%. Now with 200, 300 crores in revenue, you get a beautiful platform to list. But the bells and whistles around that platform need to be tightened so that the investors are protected as well, right? So that it is not where only a few people are making money from the investor side as well.
Got it.
So I think the regulations will eventually, tighten. I think our regulators do a fabulous job, whether it's RBR, whether it's SEBI, when it comes to regulations. But this is a little bit of a new animal, right? And I think people have tasted blood initially. So let's see how that evolves. That sustainability is most important, right? We need to see it over a period of 5 years, 10 years to see whether SME market really sustains.
It's a young, as of now, it's pretty young. It's in its early days, right?
How is it globally?
So globally, you look at it, frankly, if you look at, for example, there was the New York Stock Exchange, there's the NASDAQ, right, which came up for tech businesses. There. Even in India, for example, we have had attempts. See, the idea is basically to bring capital to businesses. That's the whole thought process. There used to be the OTCI exchange, if you remember, long back.
No, I don't know.
There. So those are kind of things that those attempts will always be there. And to that extent, I think you should give time for some of these things to stabilize. And like Ratna was saying, it's a great mechanism. The question is that it needs to sort of get regulated properly. And I think like all things will settle down.
Both of them.
Right now, we may be in a bit of an exuberance
perspective
territory.
Yeah, but like you all said that the working capital is like the major issue in logistics. So do you think companies can do SME IPO to get that working capital, or should they go for investor money?
Today you look at it, an SME IPO is 20 crores, right? Which is in 25 crores. And today you look at it, you go to most private investors, they will say that 20 crores is too small a deal size actually. So to that extent, I don't think that will be the reason for actually going to the SME IPO. There, because I think if you have in today's market with so much of capital floating around, right? It's basically both sides want each other. So people with capital want good businesses with their thing, and people with good businesses can have a variety of capital providers to access to. There. And at 20-25 crores is not a big amount in today's environment.
Who are these people given 20-25 crores? Ratna, what's your ticket size at Fundalogical Ventures?
No, our ticket size pretty much starts at 10 crores, go up to 30, 40, 50 crores. So we pretty much play in that range. What we say is we want to catch early growth businesses, right? Early mid-market, P kind of a thing. Who are these people? But like Dinesh said, there is a lot of liquidity right now, right? There are family offices who want to do direct investing. There are funds who are now very focused on this early growth, mid-market kind of a stage, because India has essentially been barbell, right? A lot of players who are doing seed, pre-seed, angel investing, and then there are the large funds. So a lot of entrepreneurs and businesses start choking when they reach a certain stage. That is where they need most handholding, right? But the color of money is green, right? You can go to a bank, you can go to an NBFC, you can go for an SME IPO now for these early growth businesses, and you can go for VC money as well, right? But the intelligent or the long term entrepreneurs will want the right partner in terms of who they take money from, because that that can change the course of your journey.
Right. But I want to actually ask you as to why did you double click on logistics as a sector to invest into through your fund? Like, do you see as an investor you will be making more returns in that sector vis-a-vis the other ones, or what was the thought process behind coming up with this kind of a fund investment thesis?
So, very interesting question, right? There is an external reason for it, and then there is an internal reason for it, right? The external reason is that this is a sector which has not seen in the last few years the corner office, correct? It's not been a darling of the markets like a fintech or consumer businesses have been for investors as well. Having said that, the underlying current has been that $11 billion has got invested in this sector in the last 3 years across 400 unique deals. So, if India wants to be the fastest growing country in the world, and the government wants to make it the manufacturing hub or the global supply chain hub, the lifeline is logistics. I mean, without that, everything else is going to crumble. So we really see that this is sunrise in a sense of growth and in the sense of identification, although it's been an age-old sector. The other reason is that Dinesh will agree with me on this, that one of the best ways to make an investment is to focus and to know your sector inside out and have a network in that sector, which helps you not only source deals, evaluate deals, but also help the company in their growth journey.
Yeah.
So for us, I think the platform is a combination of industry stalwarts from supply chain. Right? So you have the Jain Bakshi group, the original Blue Dart founder, a couple of others who are there, as anchors to help build this out. The main role is, they provide a lot of mentorship and access to their invaluable network for our deals, for our promoters, etc. So that makes a lot of difference. So you basically pick a sector where you see growth, but you play from a position of strength.
But what
That is
kind of
the
returns are you expecting from your portfolio? This is an empty question.
This is a question, which ideally, see, how do you play VC versus private equity or VC versus growth investing? The VC guy will invest in 30 companies, will want 10 of them to really kind of fire. Correct? For us, we work with every company, and our objective is to grow at 3 to 4x.
Okay. So what kind of stakes do you take initially?
We take significant minority stakes.
Which
it
is
could
like
be from 10% to 20%, 25%. Sometimes we might go in with smaller stakes, in companies where we really have belief in the sector, or where we feel that, there is an opportunity to invest in a liquidity event coming up faster. Because as a fund, you have to think about portfolio construction as well, right?
Yeah. Got it.
I think just to add to what Ratna said, I think if you look at the fund, right, I think the core expertise, right, I think the way to the set of sponsors that she's brought in together, right, I mean that is amazing. You don't find that in most different funds.
Yeah.
And it is all about if you look at it ultimately, what's a fund? A fund is basically using your knowledge with money and to try and identify interesting opportunities, right? That's exactly what a fund is. It's just a combination of knowledge and money.
Yeah.
And I think that the ability to assemble that talent and that knowledge source which is in, and to be able to channelize it, right? There is a lot of knowledge out there which is in, right? But the question is, do you get the time and attention of those people to actually be able to deliver something which is there? I think is amazing. Also, I think if you were to look at it, if you look at where is the impact of technology and disruption taking place the most, right? Frankly, I think it's in the logistics space. The way people shop, human behavior has changed. Expectations have changed, right? I mean, we are talking about this word quick commerce now, right? 20 years back, if somebody had talked about quick commerce, you say, what the hell was it? It's right? I mean, it doesn't make sense at all. I mean, quick commerce, and somebody says you want 15-minute delivery, I mean, like, why do you need 15-minute delivery? Would have been the obvious question, right? I mean, the market didn't exist. But as people's habits change, behavior changes, right? Opportunities keep coming up, and you find maximum disruption that is taking place in this entire exercise of basically moving goods. Right? I think also the fact is, if you look at it, the world is not constant. Right? There is constant disruption going on. Be it the Red Sea problem, the Houthis, the war. Today, when you look at it, I saw a map of the world in terms of flight routes, right? If you look at it, it's so different from what it was 3 months, 4 months back, right? You find everybody trying to avoid a certain geography. And all of that is nothing but logistics, right? Because ultimately everybody is trying to optimize all the time. And today, I think with the availability of information which is in place, the disruption that is possible, there is so much that can be done. And I think that is and wherever there is disruption, that's the place where new businesses will emerge.
But which sector are you seeing more disruption in particularly?
Across, I mean, you look at it in the whole warehousing space or transportation space, be it intercity logistics or intracity logistics. I mean, you wouldn't have ever thought of a business like a Porter would have been there some time back, right? Or a Revigo to have been there at some time back, right? Or delivery, for example, is basically what about a 10-year-old creation, right? It's not too long which has been there. So if you look at all of these businesses have actually emerged from a very, very small, literally, I mean, 10 years is actually not a long time in the history of a business, right? And I think they've created massive impacts. So I think is a huge, there are a lot of disruption, and which is why it's an interesting opportunity to invest in.
Got it.
You know, my favorite example of the change in go-to-market for most products is very simple, right? The shirt that you are wearing today, 15 years back or 10 years back, you would go into a shop, a shopper's shop maybe, pick up that shirt and come, correct? How did that shirt reach over there? The brand would have given it to a distributor to a sub-distributor, and then come to the retailer. And sometimes for shopper stock chains, they have a direct thing. Today, that has become immensely complex, right? You buy the same shirt from either a shopper stock, you get it in your mom and pop retail stores, you get it on Amazon or Flipkart, you get it on the website's own the brand's own website. Imagine how does the brand manage at how much inventory to keep where? How do you manage transportation to so many locations? Also direct, I mean, you have to finally reach it to the customer. So the whole enablement, because the go-to market has become hybrid and it's become multiple chains of contact with your customers, you really have to plan well. Right? Sometimes you do different pricings, you run algorithms, you decide where to keep more inventory, which SKU sells where. Location wise it will differ, platform wise it will differ.
But how do people decide what kind of inventory
that
should
is
they
exactly
keep?
what
The tech.
the new emerging companies are doing. So there are so many companies in this space who come up which are only enabling people to sell online. Which is where they run pricing algorithms. They tell you which SKUs where, how much inventory you should manage, you should sell more on what, you should sell more of which product. It's actually very complex.
How do they build that back end?
I think because it is complex, right? You really need to build backend, which is it. Like, and you rightly said, there is a need of backend, right? But the point is that, like everything else, you build something, it takes time. Nothing happens in a hurry, right? Anything, the easiest thing to do will take 1 week, will fly by with nothing happening. Right? So given the complexity is so high, right, and there are varying objectives, right? you want to make sure that no customer comes to your shop and he gets everything that he wants, right? But the fact is, at the same time, you want to optimize on inventory also. So there are what you would call
double-edged sword.
Not it's you want everything,
Yeah,
but then you have to optimize. So you're never going to get it 100% right.
Of course.
Right. So you're always going to keep making efficiency changes depending on the priority you have at point in time. Okay, at some point in time you may have increased sales, maybe the motivation that could be there, right? At some point it could be efficiency in inventories and working capital that you might need to do. So it depends on what phase of growth you have, what are the priorities that you have, and they keep changing. And competition keeps changing all the time, and then the regulations keep changing, right?
Yeah.
So for example, I was hearing about this where in Delhi city, for example, right, EVs essentially are allowed the ability to come into the city during a different set of times, right? Now what that means is that the use of EVs in actually transportation becomes bigger and much better. So if earlier if it was not a viable operation, now it becomes a lot more viable because you can sweat that asset a lot more there. So you find that there is this whole regulations, geopolitics that happen, a lot of these. So it's constantly changing. It's like trying to solve a puzzle which is basically not in 2 dimensions or 3 dimensions, multi dimensions.
Right. Absolutely.
So that's the beauty of it, and because of that, these opportunities keep coming in.
I'll give you an example of a apparel brand, and it was a men's apparel brand. You know, men, the usual thing is that they go and buy the same product again and again and again. You really don't need too many SKUs. So what he was saying, that sales versus inventory, how do you kind of match that? What they did was that they identified their highest selling SKUs, and they were more like a fashionable apparel brand, very high, very for the younger generation. So the younger generation will want more also, right? So they kept the standard SKUs in the store. They would also give them a fit option, and whatever was not there and they wanted it would be delivered home for them. So it was a beautiful combination of tailor-made and retail, which is what most men look for, right?
I think also the expectations of people have changed,
Yeah.
right? I mean, what is my expectation, what is my daughter's expectation, right, are worldly different, right? When I sort of, when you sort of earlier, you went to a place, you had basically tea and coffee, that's it, which is in place. Today you go, there are some 50 varieties of coffee which is in place, right? What that means is if you're running a coffee shop, right, it's not that easy. It's actually constantly, you need to sort of be able to manage multiple SKUs, and people want essentially the definition of what they want is a lot more, right, which is in, and it's a lot more instant gratification, right? So you want it there in a short period of time, which is where the quick commerce element comes in,
Right.
which is in. Ratna made an interesting point about returns, right, which is in. The general bit is that if you keep the gap between an order and delivery long, chances are the customer doesn't want it at that point in time. Okay. So the fact is that when the order has been made to the time that you deliver it needs to be the shortest, which is it. So I think all of these essentially make it quite interesting.
Like, what are some of the channels which come in to make this time shorter? And how do you manage the capital for it as a business?
So when you say the idea there is to reduce the
Time.
speed of delivery, right? I mean, ultimately the fact is the minute I produce it and if I can get it to the customer the fastest, okay, that's the best, right? Because ultimately,
For that you have to create more dark stores, is it, to give it faster?
Either you need to create more dark stores, that could be one. There could be a direct to delivery also, which is the entire D2C channel mechanism that would be there. So you could do multiple depending on where and it is different for each different product category that would be there, right? The way that I would market a shirt, okay, or the way I would market a car, which is the right. Ultimately, today when you look at it, each car is also getting semi-customized, which is the right. You can go and say what exactly you want within that. So the way that you will handle the supply chain for a car versus for a shirt will be vastly different. It is so there is no single size fitting all. So it's getting a lot more customizable, which is in place.
Yeah.
The challenge, however, is that the more you customize, okay, the less efficient you become because you're not able to reuse resources.
Correct. Yeah.
And that's that constant push and pull that is there. You asked at some point in time, right? Why does Flipkart not do this and somebody else comes and do this, right? Because ultimately, when as an organization grows big in size, which is then what you want to do is you want to make things efficient.
Yeah.
Okay. The minute you try to make things efficient, you'll basically see that there's a gap, which is a narrow niche that you're not actually able to deliver well.
So is that what these newer startups are capitalizing
exactly,
on?
and that's the cycle that keeps happening again and again. So
Like,
a startup becomes a delivery is actually a startup which has become a more mature business in a 10-year time frame, right?
Like they say, the popular saying within entrepreneurs is an entrepreneur is made overnight in 10 years.
yeah, that's true. But people are now saying that this 10-minute thing will also get reduced to 5 minutes to even 2 minutes. So I mean,
that is
undoable. So
undoable. That people thought for 15 minutes also, which is happening now.
15 minutes is still okay, right? 15 minutes means they'll come within 20-25 minutes. You're normally shopping things which you really need at that point in time. You're cooking and you don't have something and you will kind of blink at it. There is a use case for it, right? And then it becomes a use case, becomes a habit, right? So everything essentially depends on consumer behavior, right? Today, if I tell you the changes that are coming in warehousing and because of consumer behavior, you will wonder how. But what is happening in warehousing, right? GST came, you had this whole trend of mega warehouses so that you don't have to keep a warehouse in every state. But COVID came and reversed that thinking completely. They said we don't want to concentrate risk in one location. And then the consumers want everything fast. To be faster, to close, you have to be closer to the consumer to be faster in your delivery.
Yeah.
That is where the entire disaggregation of warehousing has happened. So while you have mega warehouses and grade A warehouses, grade A warehouses for as your mother warehouses, you need a whole chain. They are called all distribution centers. So these Flipkarts and the Amazons have distribution centers, and Zeptos and all have dark stores, which could be a 200 square feet go down as well, or like a garage or something.
So which model do you think is more efficient? The distribution center model or the dark store?
Both are required, no? So a distribution center model is required by Amazon today because they're doing same day delivery or 1 day delivery. When you're doing a 15-minute delivery, you need a dark store.
But I think there's just one. I think maybe you should speak about the investment that you've done in the B2B cold chain logistics business, right? So if you look at it and this is similarly is an example of how consumer habits impact the way businesses, the distribution changes, right? Which is today you look at it, we eat a lot more fresh products. We eat a lot more things that require cold storage. Which isn't required, right? So if you look at it, a lot more fresh, a lot more frozen, a lot more things that require a cold chain. But if you go to your local kirana shop, he doesn't have cold storage space, right? So if I had to deliver biscuits to him or cigarettes to him or chips to him, right? I could do once in 3 days or once in 4 days, right? But if I have to deliver fresh, okay, I need to make it much more efficient, right? I need to deliver it every day, or maybe even twice a day. If I have to do twice a day, right? I can't have my warehouse sitting outside Bombay, Navi Mumbai, or beyond. Bhiwandi or right? I need to have the full set of micro warehouses across the city. And would I have needed this business maybe 10 years back? Not really. Okay, I won't have had enough volumes. But today when you look at it, fresh products, the demand for that is a lot more. Which is right? Epigamia, for example, right? I mean, the food products that are coming in all require basically constant delivery.
Right.
So the whole concept of micro warehouses, intercity logistics, cold chain logistics is getting important.
Which
and
was
that's the business opportunity.
B2B startup that you've invested in?
Yeah, so we've invested in this cold chain solutions provider. There's transportation, warehousing. The whole idea is cold chain is a very asset heavy industry. Till now, like he said, right, India didn't have too much of demand for it. Last 5-7 years has changed that a lot. Two reasons for that, right? One is as income levels increase, the consumption of products which need cold chain increases dramatically. And this is a study, actually, there was a study done globally where they found out, and it was a very interesting article. I'll send it to you. The guy did that study by going to people's houses and opening their refrigerators.
Acha.
And the products that you find in the refrigerator will very closely track income levels.
Oh.
The kind of things that you consume, amount of things. As the income level increases, you will always find some or 2-3 flavors of ice creams kept in this and all. So there is a beautiful study that he conducted just by opening refrigerators of people by going to their houses. But the moot point being, coming back to cold storage and all, it's been a very asset heavy industry, and therefore even the largest players have 40-50 warehouses, but there are 10,000 cold warehouses in India in an unorganized fragmented segment. This guy is like taking the excess capacity in these unorganized warehouses or network and refurbishing them, making them grade level and building a grade A pipeline on it in terms of revenue.
So in this kind of business, what are the main cost centers and revenue centers?
So revenue is, so for example, his client is a McCain. McCain makes those fried items for kids, so frozen food, which requires cold chain. So they will enter into a contract with them. They will manage the warehouse for McCain and supply to the distributors of McCain or wherever McCain needs it to be sent.
Got it. But if McCain has to do it without them, how would they do it?
McCain, see, there are two ways of doing your logistics for any company, right? Either you have everything in-house or you outsource it. That is why 3PL, right? Third-party logistics providers. 3PL is third-party logistics providers who help companies in their logistics. In which case, they would have to go and find a cold warehouse, impanel them, do it on, enter into a contract with them, with the real estate owner, because most of these warehouses are run by essentially people who have real estate and have built some cold storages. Versus that, when you contract with an ex-company who does cold chain solutions management, they will find out where is the warehouse, which are the relevant ones for them, inward, outward, temperature control, everything is managed by them. I think reliability in supply chain, especially for fresh products like milk, ice cream, either milk products, is the most important thing. वरना वो खराब हो जाएगा.
Yeah. But I have this doubt that, how is it that people are getting the money to build these cold chain centers?
So the beauty of the model is, for these startups or the early growth companies, they are creating this asset line. They don't have to build it. Suppose Dinesh owns some property in the NCR region. It is at a very strategic location because NCR say connectivity is very good. He said, let's put up a cold storage. His return on capital employed will be 20%, right? But he doesn't know how to run a cold storage. The guy will go to Dinesh and say, you own a cold storage, right? Your facility is 4 on 10. I will take it up to 8 on 10.
What do they do to take it to 10?
There is design expertise. Where you design the racking, how do you automate stuff, what kind of equipment you use. Like he was talking about pallets, right? So in cold storage also they use pallets. So, how do you stack up those pallets? How do you do inward and outward? Because the electricity consumption depends on the entire design, the inward and the outward.
Right.
So if you have to bring efficiencies and this is actually very, very energy efficiency driven. So if you do it well, there is a lot of saving in energy.
Yeah. Is electricity like one of the biggest costs for cold chain centers?
Yeah, it would be.
And what are the other costs, like from a layman's perspective, just trying to understand the business?
So the perspective can be from multiple angles, right? From a layman's perspective, there is a company there is Dinesh who is the owner of the property, and there is you who manages the company. Correct? The company enters into a contract with you saying that I will pay you X amount per month to manage this, and you pay Dinesh the rent. And you make money for doing the end-to-end servicing to the customer. Which Dinesh can never do because he doesn't even know the customer, he can't
Right.
meet the customer, he can't manage things for him.
Got it. And what are the margins like that people are making in this?
So on a leasing model, if you lease the facility, the margins are very, very attractive. 30 to 35% margins you can make on a gross basis.
I think margins all depends on volumes which is in place.
Yeah.
So if you look at it, this leasing, this kind of concept, right? If you look at it, most owners of warehousing space, right, increasingly are they getting to be large real estate funds, which are the likes of the Brookfields and others, which are actually trying to build capacities that are there, right? Now they're there, the ability is to basically bring in large pools of capital and build essentially even that 100 basis points or 200 basis points difference can make a huge return if it is done over a large volume.
Yeah.
Which is there.
So there are builders of warehouses and then there are managers of warehouses. They're two different ball games.
Got it.
I think the other interesting one is it looks easy, which is then. So I had gone to the JNPT port about 15 years back there, and we should look at it, for example, loading and unloading a ship, right? It looks quite dumb activity. I mean, it was there, we just take it out and put it back, right? Which is then. But then you think about it that in a port, time is money. That for every minute there is basically a charge that is in place, right? So if you look at the way they manage that whole stuff, right, there is 10 containers, 10 levels of containers that are put in, right? Not everything needs to be taken out, right? Because ultimately not everything is getting unloaded at the Bombay port.
Yeah.
The ship is continuing further.
Correct.
So you need to be able to, you have only X amount of cranes that are there. A crane can actually perform X amount of activities. So before the ship actually docks, they know exactly which container will be lifted when, what is the duration in which it will be taken, and where it will be put in a manner that it can be taken for the next delivery which is in place there. So that entire exercise, when you look at it, is actually quite a complex OR algorithm, right? To be able to manage that exercise.
Yeah.
And there you look at it, the difference in 5 minutes, in seconds, is huge amount of money that you're there, because ultimately you're utilizing your port facility damages that you're paying, and you can actually turn around and use an asset like a ship a lot more. Makes a huge difference.
Which is the busiest port in
JNPT.
I think
JNPT is like 70-80% the capacity utilization.
And in a warehouse again it is the same thing, which is then right, which is so one of the other interesting bits that I've seen was, like you said, electricity is an important cost, right? Which is then there is this warehouse that I've sort of seen where you're trying to use essentially drones to be able to pick up and drop. So ultimately, what does the warehouse do?
ये हो रहा है क्या अभी?
So what happens in a warehouse, right?
हाँ.
सामान आता है, you take it and then put it in the right rack.
Correct.
And then somebody wants the goods, so you remove it from the rack and put it in the right place. So there is an input, there is a racking, and there is an output, which is then. So somebody is taking it from here, putting it into the rack. Somebody is taking it from the rack and putting it away. That's essentially what is happening, right? Now with barcoding technology, which is so clear, which is in, right? Do you really need electricity on? For example, a drone doesn't need to see, right? Ultimately, you're programming it, which is in place, right? So that is essentially the fact that could this have been done earlier? Not possible. But with drone technology improvements that are taking place, which is then, right? So that essentially changes the economics and costing a lot more.
This is so interesting. Is it really happening now?
It is happening as we speak.
Yeah.
So robotics and automation. So he spoke about drones being used, right? We've seen companies who use the small bot kind of robots for picking and putting. So that is only one part of it, correct? But there are other players who are doing a lot more of the automation in warehousing, like sorting. putting it, picking, quality checks, through those radars and stuff like that. A lot is happening. But you know what happens in India? Labor is cheap. Correct? So the return on investment for automation has to be justified.
Correct.
Currently, who's doing automation in warehouses? These large 3PL players like delivery, the marketplaces like Amazon and Flipkart are doing all of that, and some MNCs must be doing it. But otherwise, for smaller warehouses to justify that, it's going to take some time, either in terms of their volumes increasing, that they really need that efficiency, or in terms of the labor cost going really awry, right? Which can happen in 10 years, right? There is massive shortage of blue collar labor for various jobs right now.
Got it.
But this is a huge potential abroad, even currently.
Which is this drone company? Which is doing?
I remember a Pune-based company that was working on this kind of.
Are they already in the market now?
They were there in the market, it's in their place. I haven't really tracked that.
Oh.
But you don't need drones. Like you said, you can do industrial robots, right, which is in place. Because ultimately in a warehouse, it's a very defined set of path that you're taking on, right? So there is a lot more. The point is that technology is changing. And technology is changing every day. Okay, and that makes things possible.
So robotics and logistics is also a big sector to tap onto.
So robotics is basically
automation.
It's a tool. It's a tool which is getting used. Which is like, for example, barcoding, right? For example, is a tool. Like, for example, there's this whole thing of basically putting together locks, for example, right? Which is I send a good from point A to point B. I want to make sure that it's not got opened by anybody else. Okay. How do I make sure that only the receiver gets it? It's like our OTP model, right? Which is in place there. So how do you make sure that a product is basically locked at one place and it gets opened only by the end consumer whom it has to get used to, even if the product is getting used by multiple interchanges that are taking place, right?
So is there some tool which helps you track that?
There are startups which are doing things which are there.
So
digiting
initially they used to do those plastic seals which are reusable. So once it's opened, somebody at the other end knows it is open. But there are these like startups. They're not scaled right now because the utility still needs to be defined properly. But there are ones who can do digital traceable locks and stuff like that.
So think about it. Till about 2 months back, okay, supply chain security was not a big issue. Okay, you had the pager bombings in Lebanon. I'm sure you must have read about it, right? Where somebody basically ordered a pager and then essentially in the supply chain somewhere somebody actually added explosives in it.
Yeah.
Okay, now what happens is that the thought process of consumers will change, right? Earlier security was not really an aspect that you ever paid attention to.
Correct,
right?
Yeah.
You need few more incidents like this for security to move up the value chain, which is in place there, right? And then what that will mean is how do you essentially secure my supply chain? Right now, that's not a big opportunity right now, right? But as behavior changes, as people expectations change, you find a lot of these
like for passport, I was not bothered like who will open it, this, that. But now after hearing this incident, as a consumer, I will be like, okay, I need to have a full track on, who's looking at the document if it's coming from one place to the other. So why did you say that they're not scaling up as much now?
Utility has to be established. No, people are used to sending cartons, in trucks, where the truck driver stops, where does he sleep. Nobody had any clue. What was their concern? My goods should be going from point A to point B. But to reduce pilferage, to increase visibility and security now, I think a lot of these things are coming. Scale.
Yeah.
It needs scale for everything. Like for example, the other use case we find where things are happening is blood transport, for example, right? Blood transfusion, right? I mean, there is, I don't know if it is true or not, but I heard some horrifying numbers that there is almost about 10 to 15% of blood transfusion is not really correct.
Really?
Right? So there are errors that take place.
Did they adulterate it or something?
Not adulterated, but the fact is it is moving from a blood bank to essentially where it is used across multiple chains, right? And the question there is how do you make sure that the authenticity and security of that actually is getting done, right?
But why would somebody play with it?
Not a play with it. It's not intentional. It's the unintentional
So
bits
temperature
are
is
there,
not
right? Because
controlled,
Ah.
there will be a problem.
there's a temperature control, there is a handoff taking place, multiple handoffs, right? Every time there is a handoff. You must
Correct.
have seen the Chinese, the whisper, or the
Yeah,
thing, right?
yeah.
Somebody tells one person, and then by the time it reaches the 10th person, it's
Hmm.
completely different, right?
Hmm.
So you do have multiple. So wherever there is essentially high value products that are there, and which have multiple handoffs, right? There you'll find security will become a lot more important, which will be there, because errors will automatically creep in.
Right.
I mean, a simple thing, for example, right? Counting currency notes in a teller,
Ah.
errors take place, right? Which is why a teller has an allowance, which is in for errors.
Yeah.
So when you take a simple thing like that, there are errors. Then the minute you have more complex things, which is there across a chain, then definitely the errors will multiply.
Yeah. But how long do you think this will take? The market will take time to mature in terms of the trackers in supply chain.
So GPS tracking and all is
happened.
mostly
No, like in terms of the scale.
So the Indian market is not a market which only pays for tracking. So there are companies who only do SaaS, correct? But the SaaS market in India is limited. Why? Because as a customer, you will say, you do my fulfillment also. You deliver the product from point A to point B, and then you give me tracking for it. But they won't do something like just take tracking or separate it from delivery and stuff like that. Though of course some of the customers do it, and therefore there are companies which are only doing tracing and tracking. But we as as investors or people who would back certain business models, we would also prefer backing business models which are more integrated, just not software.
Also, just to add to what Ratna said, see, when you look at it in the investing world, right, you don't want to back an idea too early.
Yeah.
Okay, you back an idea too early, the question is it takes a lot more time because the market has to catch up. Right? So you want to back an idea at that right point of disruption. It may be a great idea, which is in right, but the point is the market ready for it? I mean, that's that constant match that you have to do. You back it too late, then you miss the bus.
Yeah.
You back it too early, then you will die before the market actually evolves. So, and that's that getting that, which is why they say, right, the timing is so important.
How do you identify that timing as an investor? Like, how do you notice?
It's an art and science. You have to see the
Like, you can give an example of some previous investment that you timed right and invested in.
So timing is very important when it is very early stage, right? Most of the growth stage investments, they have a history behind which you are going to diligence and see, and you're going to figure out where the next phase of growth is coming from. For example, let's talk about logistics SaaS itself, right? We spoke to one company which was doing logistics SaaS, only tracking, only for the cement sector.
Oh.
So large companies like ACC and all were using this guy. He made some amazing margins, like 80% margins.
80%?
80% margins, because it's a technology product, right? But now, think about it. Apart from those large companies, where will he expand? Is he going to expand to another sector? Is he going to expand to more customers? As he expands, of course, the margins will go down. And then the growth, right, may not be at the same pace, because today the Indian market is not ready to only pay for tracing and tracking.
Ultimately, it's all about economics. I mean, the starting point is the customer going to pay for it, right? I mean, that's
and how
the
broad
starting
base
point.
is your customer?
And how broad base?
Addressable market at the end of the day.
And the question is that when you look at it as a startup, and you'll find that the market is narrow, which isn't right, because if it was such a big market, somebody would have anyway come and offered service it, right? The question is that market going to grow at a much faster pace there? See, today you look at it, no startup can compete with a well-established company in terms of the resources that it has, which isn't right. So your only hope is that there is a narrow niche, and you're able to sort of capture and build that in scale and size before anybody else actually looks at it as a much more viable opportunity.
But that's the beauty. Like the very early stage investors, which invest just on the ability of their technology, even when there is no product or revenue, are taking a bet. They take 10 bets, and a few of them will fire well, a few of them may not fire well, right? So when you find something really interesting, you back it, right? But you create a portfolio which is diversified in such a way that a few of the bets will succeed. And you're okay if the few others don't. Because when you're very early, like he said, you back it too early, you don't know that it will succeed. Now, if you have to do 5 of such investments, you don't want to do such investments, right? Because you want to back products and all which are proof of the pudding is there, right? They're showing some growth and trajectory and all of that. But when you want to go in early, that is the best way. You have to diversify across the bets that you take.
So in this cements company example, are the founders going to diversify? Like as an investor, what was your opinion to them? What should they do to scale up?
No, their plan was right to scale up by going to different sectors and stuff like that. But cement, the companies are very large. For them, the logistics cost is minuscule, right? So even if they have to pay more for tracing, tracking, etc., they are going to be able to do that. But generally, the biggest pressure in any company is on the sourcing manager or on the supply chain manager saying reduce cost, reduce cost, reduce cost. So then you have to be wary of those situations saying that if you expand to X, Y, and Z, are you going to be expanding under the same model or you're expanding under a different model?
Correct. Got it. But as an investor, what sweet spot is your margin rate? Like, how much would you expect? At least इतना तो होना ही चाहिए.
So, as an investor, sweet spot for us is 2-3 parameters, right? Only when I look at the company, of course, the promoter, management, sector, TAM is very important, right? The way you look at it is the first thing you see is the TAM big enough, right? Second is you look at the management, which is core because people can make or break businesses, right? And the third one is that you will look at is the idea within the segment that they are playing is differentiated, what are they trying to do which is not already done, or even if they're doing something which is done, are they doing it differently to ensure sustainable growth, right? And when you say sustainable growth in terms of margins, right, at a gross level to an EBITDA level essentially depends upon your stage, correct? At your gross level, you should at least have double digit 20-30% margins to be able to bring an EBITDA to a respectable level at a maturity, right? Initially, of course, it will pick up.
Got it. And in terms of financing,
I think just to add to that, while EBITDA is important, right? I think one of the key parameters that you'll actually look is how much is your return on capital employed. Right?
Yeah, exactly.
Yeah.
Then the question there would be that how efficiently are you sort of managing and running a business? So, say for example, if I'm running a warehousing company, right, which is then I'll always have high margins because I've anyway invested all that capital. It's like a rental business, right? I mean, my margins have to be high. Whereas when I'm running a freight forwarding operation, which is then right, where I don't have any assets, which is then my margins will be low. Like for example, if I look at a TVS supply chain logistics business, right, it's a 6 to 7% EBITDA margin business, right? But the fact is, you can run it on scale at very low capital employed, which is in place, right? That then plays a bit with it. So I would actually look at EBITDA margins, a combination of things like what Ratna said, the EBITDA margins, the gross margins, and return on capital employed, and then try and see, as what she said, the TAM, which is it a big enough market? Can it really grow?
The margin cannot be the only determinant, but there is a choice. Like if you are a healthy margin business, you don't need to be worrying about a lot of things. When you're a thin margin business, say distribution businesses, like the pharma distribution business is a very thin margin business. What do you need over there? It's not that people don't invest in them. You've seen whole set of consolidation that has happened. A lot of investors have backed businesses who are consolidating and all. There the story is consolidation. How do you scale and then how do you bring efficiencies because of that scale?
Yeah. Well, I was coming to the financing bit only. Like, how do you decide when to take debt, when to take equity in your
I think it's basically it's like a buffet. You go and take what you want, right? Which is then because in a way when you look at it, see earlier you had only debt and equity. Today you have multiple options, right? You have venture debt, you have mezzanine debt, you have convertibles, you have a whole host of. There is even revenue-based financing, which is then, so there are lots of different options that are there. I think the idea is to sort of marry what you really require, and for that point in time, and it may keep changing. And that the need for capital and the way that you'll actually finance it will also keep changing, depending on your priorities at that point in time. So I don't think there's any real right or wrong answer. So in one side, when they say that businesses, you should have a lot more debt, okay, for example, because it is tax efficient, because essentially your interest income goes away and it saves it then. But at the end of the day, then it reduces, the biggest cost for bankruptcy is actually debt, right? So you have to always play a balance there between which instrument you take.
But sometimes
at
when
what
you're
point in
too
time.
close to the mirror, you can't see yourself. So is the founder to its businesses. That's where you as advisor come in. So can you give me an example of situations where you've suggested people to take debt versus in situations where you suggested them, okay, you can go for equity that will suit you better.
So I think so let's play that out, right?
Yeah.
So when you look at it, frankly, if you take in more capital, so the question is start one step before, right? How much capital do you need? Okay, how much money should you have in your bank, right, in order to grow? Because the more money you keep in your bank, which is in place, that means you have diluted too early, right? That means either you have basically given up too much of equity stake than you need. So how much is the right period of time, right? Is it 12 months? Is it 18 months? Is it 24 months, right? Now the judgment from, I would say less than 12 months may be dangerous, okay? More than 24 months may be a bit excessive, being conservative, which is in. Now the question between 12 to 24 is again a question of deciding as to your own circumstances, which is in place, right? Now the difference between a promoter and a person who's an advisor, right? And just right. A promoter is too close to what he's doing. Okay, so they're both advantages and disadvantages. The advantage is you know exactly what is happening. You know what your situation is. Sometimes what happens is when you're too close to the situation, right? You basically get blinded, which is in place, right? Now the role of an advisor is to basically show the mirror, which is right, because an advisor cannot decide. Okay, he can only show the mirror in terms of what a neutral perspective is, right? Because, like for example, when you are involved day to day in something, right, you have so many inputs that keep coming in, right? It's a lot of micro inputs that are there. It's like basically seeing that when you see something at 100 feet height, and when you see from the moon, which is there's a big difference in the way the same situation looks, which is in. So your ability to see a bigger picture rather than basically a very narrow picture. I think that's what an advisor can really do, is to sort of bring that sense of perspective that can be there.
Yeah.
And it becomes an input to actually take on place.
Yeah, that's fair. But like, in what cases do you suggest debt to businesses?
So debt is whenever you have some element of predictability of revenues that are in place, right? I think in that situation, a debt becomes so higher the certainty of revenues, higher the certainty of cash flows, right? The more you can shift towards debt. The lesser the certainty which is in, you're better off funding it by equity.
And how do you measure the performance of the equity and the value of it?
It depends at different points in time, right? So, for example, if you're relatively early on, right, your objectives are very different. When you are at an early stage of your growth, right, you're actually trying to capture market, get customers, you're trying to get a product market fit, right? Which is why in the startup world, which is in, right, when there was a gross margin, then it became a CM1, a CM2, and then a gross margin, and then a EBITDA margin. And it's not, there is a science behind it, right? Because at a particular point in time, right, this is what you need to achieve. Okay, then you can actually grow. Because if you try and be perfect on day one, that's not possible. So you will have to go through phases that are there. Having said that, it can't be very rigid because the market changes, right? You have a COVID that comes in, you have a war that comes in. So the market keeps changing. So you need to tweak your plan accordingly. But I don't think there is a single filter that is there. I think the filter is tailored pretty much to every individual business, the circumstance at that point in time.
Yeah. And I'm seeing a lot of mezzanine financing also happening.
Absolutely. I think the amount of mezzanine financing
it's more.
is definitely increasing a lot more, right? I mean, today, if you look at it, I think it's the equivalent of your balance funds that are there in the mutual fund industry, right?
Ah.
Which is in place there. So you're trying to marry ultimately in the whole financial world, right? It is all about risk and return.
Ah.
I mean, this is everybody is trying to find discontinuity in this risk return curve.
Yeah.
And that is where knowledge becomes important.
Mm.
Where you can actually take on, which is why when Ratna's perspective, right?
Mm.
Why narrow it down to a logistics space and why assemble this stalwarts of the industry? Because you can actually assess risk a lot better.
Correct.
So when you're asking the question of return expectations, right? I would actually think the question should be what is your risk expectation? Because ultimately, what you can actually control is only risk.
Of
Return
course.
is a future expectation, is an outcome that happens there.
Let me ask her that then.
I think it's all about figuring out business models, especially when you have people who run businesses like that, right? The ability to understand is much better, and the ability to open doors is much better, which helps some of these early growth companies a lot in their journey.
But as an investor, what kind of, since you said you come as a significant minority investor and you want to be a part of their growth journey, make them scale up, what kind of rights do you take to really tame the tiger, because you have to be, operating as a part of their team to be able to suggest them to implement some changes. So, as an investor, what are your non negotiable rights?
On a lighter note, your rights always depend upon your relationship with the promoter. So while you'll end up taking some veto rights, sometimes board rights, sometimes board observer, the basic exit rights, anti-dilution, all of that is very standard, right? Some of the VCs, don't negotiate so many bells and whistles. Most PE funds will do everything. Early growth funds will come somewhere in between because you're taking a certain stake, but not necessarily very high stakes or not majority or something like that. So you try to put whatever you want in the document. At the end of the day, guy is going to do what he wants. It all depends upon your relationship and the real value add that you can bring to him. He realizes that he is going to partner with you, and the more you're able to partner and walk on the same page, I think that is the secret.
But in your experience previously, which have been some of the rights that you wanted but didn't get it easily? I mean, you finally got it, but initially you had to negotiate.
See, I think business plan, change in business lines, some of those I think all are doable. Sometimes, you want to be able to help him to get the right people in, right? To have a say in the KMPs and all. So while they will always, while recruiting key positions, it always take your help. They are little hesitant to give that on paper.
Okay.
Because they said that I'm running the business. I want the guy whom I am comfortable with, right? They will always ask you, can you help us in getting this profile? Can you help us with this? Can you ref check this one, that one? But they're a little uncomfortable doing it on paper. So it depends. It has to be then a combination of actual right versus some arrangement that you have with them.
Got it. Ultimately, the relationship matters.
It's all about a relationship, right? I mean, if you have to look at the shareholders document during your investment, then you know that you're going down a very different path. Then invariably it basically results in disputes.
Yeah. But in terms of the foreign investors coming into India in this sector of logistics, which key players have you seen coming from different regions, and how much of more foreign participation are we expecting to
When you
happen?
say foreign investors, you're talking about the global corporates?
No, like some fund which is located outside India, which didn't know about India, but now through the company they have come into India.
So a lot of these, the CDPQs and the CPPIBs and all have started with doing a lot of logistics infrastructure investment.
Yeah.
A lot of foreign money came to fund the hard infrastructure, right? So if you're saying in this sector, there is a lot of foreign money, because wherever there is more money required, the global guys are going to tap in.
Yeah, but like Dinesh mentioned about warehousing, that's picking up really well. So is data centers also a topic of discussion in foreign investors?
Data centers is a big, huge opportunity which is there, right? The question is that whether you call it technology or call it logistics becomes a different thing. But as a standalone business, I think data centers are a huge opportunity. And I think why is that happening? That's happening because of the explosion of information that is available, right? I mean, today you look at it, the number of IP addresses, right? Almost every single thing, like almost like a coffee or a biscuit also is now getting to be you can uniquely identify it, right? You're talking about products that make sure that your fan will run as soon as you enter the house, which is then all of that is happening because of data and transmission which is taking place. So as that explodes, the requirement for data centers is only increasing. Second thing that is happening is that people want to have control over the data, which is why you have all this talk about data centers within the geography that you're taking on, right? Which basically brings in the element of basically it's like the same GST problem, but at a world level now, which is then technically you could have one data center which is be there, but now everybody wants to you want to have data center in your geography and you want to be able to control over it. So there. So I think because of that, you'll find a massive explosion of data center. In fact, that opportunity is one of the fastest growing opportunities at this point in time.
Yeah, when you say fastest growing, it means in terms of the revenue?
In terms of the investments that are taking place in this space, right? And it's a hugely capital intensive business. Because it is capital intensive, which basically means that you're finding a lot of funding coming in from more of the established players.
Right.
That are